We hit you with a lot of material, a lot of facts per second. That's sort of the Intuit way. We always ask for feedback after these sessions, and any feedback you have on how we can make this a more useful and productive use of your time would be fantastic. But if I had to summarize before I open it up for questions, I hope there's two things that you took away from today. The first is one of the hardest things to do is become the version that you aspire to be without losing who you are in the process. And today, what I thought the team did a nice job of articulating is we've gone back to the core of who we've been for 35 years. And we brought those lessons and those techniques forward so that every generation today understands what the generations before us did. But then we leaned into the future. We're 12 months into a new strategy to unlock the power of many for the prosperity of one, and we have reasons to believe. Which takes me to our second point. One of the things that we're proud of inside the company is we're willing to transparently share where we're doing well and where we're not, and what the opportunities are if we simply get out of our own way. And what we hope to share today is evidence and reasons to believe. So today we challenged all of ourselves as presenters to say, because of this, you can expect that. There wasn't a single articulation today of anything that we pointed to that we don't already have in-market evidence that we're able to deliver. And so those two things, I hope, are the summation of what you walk out today. We are in the next chapter of what we think is a multi-year chapter of growth, and we have proven reasons to believe and an incredible team prepared to deliver it. So with that being said, I would love to open it up to take any questions that you would like to talk about. And we will get microphones to you, so whoever has the mic may start speaking.
Thanks, Brad. Nice work today. It's Scott Schneeberger with Oppenheimer. 2 years ago, this Investor Day, you had forecast consumer tax returns growing by a third. That's about a 9% CAGR, and the volume has been significantly lower. Now, that's not a slight because you've had tremendous revenue per return growth in the past 2 years. But I'm curious, what is the outlook for the volume growth in the consumer group of 8 to 12% revenue? Where does volume fit in for tax returns?
Yeah, if you go back to the 4 key levers that drive growth in tax, the first is total number of returns being filed with the IRS, and we think that's going to be in that 0 to 1% range. You saw a 10-year look back, it's been about 0.6 of a point. Then the second is DIY category growth, and you saw what the historical category growth has been for all the methods. CPAs are up 0.3, stores are down 2.9, TurboTax up 6.3, the rest of the digital up 1.9. So when you look at that, it's probably in the 3 to 5% range is sort of where we think digital category growth is. And then you look at us taking share. And our goal, as Greg said, is to continue to take share. A point of share, more than a point of share if we can, and then the last is revenue per return. When you put that all together, I would start to expect right now to see that sort of mid-single digit sort of customer growth. And that could, as we accelerate our ability to show that we can get more first-time filers and more people out of assisted, we'll continue to accelerate over time. But today, I think that is all that is necessary for us to continue to deliver that 8 to 12% growth that we just up-leveled for the long term. So I think that's the moderation you look at. And what that is growing faster than the category, which, by the way, is growing faster than everything else, and then us picking up a little bit of share, so it gives us a little top spin on overall category growth. So that would be the numbers that I would consider.
Thanks. And if I could just sneak in a quick follow-up on that. In TurboTax Live this last year, you just mentioned you had great acquisition of first-time filers, but you have the 3 million that had dropped that you mentioned going into this year. Could you please address what you saw in that?
We can. So what Scott's referring to, you may recall, is we had 2 hypotheses going into this year with TurboTax Live. One is we lose about 7 million customers out of our own base of TurboTax every year. 3 million of them are because they lost confidence. They had a change in their personal life. Their child graduated college. Can I still deduct her in my taxes? On and on. And so one of the hypotheses was, could we actually increase retention of our own customers by improving the confidence that they have in themselves? The second was, could we get more people out of tax stores? What we did prove this year with TurboTax Live, Greg went through this and some of the numbers, is we increased the retention 200 basis points. So yes, we did stem the tide of some of those who were moving to assisted. The other thing we proved is we were able to get a 10-point lift on people out of stores with TurboTax Live versus what we get with Core Turbo. And then the surprise, as Scott teaches us, savor the surprise, what we didn't expect is a greater mix of first-time filers. Filing for the first time out of college, or maybe now separately filing versus their spouse. And so those 3 things give us a reason to believe that we have a real opportunity for real growth as we go forward. But we did improve retention, 200 basis points. Okay, whoever has the microphone, because it'll be hard for me to point, so I'll ask the microphone runners just to get it to someone so no one's offended.
Thanks, Brad. Walter.
I don't want to pick my favorites out of all my favorites.
So question for you or maybe Greg on the trade down potential or the regulatory change. Is there any precedent you might point to or examples in your past, dealing with the free filers? I know a couple years ago, free filers caused you some challenges and you overcame those. Maybe something you could give us a little bit more detail into what drives your comfort that you can get through whatever trade down might happen.
Yes, I really appreciate you asking that question because I know that's one of the questions out there in the market today with tax simplification. I thought Greg did a masterful job of describing simplification drives category growth. And one point of category growth is worth several points of revenue growth for TurboTax. And yes, there is a reality that there could be a downshift with more people qualifying for deductions. But keep in mind, there are 84 million people north of us in the assisted category that are also going to shift down. And then there's some portion in our own base that we're going to have to do what Greg said, demonstrate that we have reasons to believe that they may want to aspire for a product beyond just going down to free. So what is a use case? A use case would be in 2004, the category had a new commercial player who entered with free. We faced a prisoner's dilemma. Do we try to protect the margin or do we do what we've always been taught, which is disrupt ourselves? So we decided to go free. The thesis at that time was we will have now taken the category down to zero. In that year, we made $29 a return and we had a 59% margin in the business. Now fast forward, free is now the only thing you hear on TV between now and April. Every commercial player out there does it. This year we made $58 a return and mid 60% margin. So we know how to innovate and create value, as Greg suggested, so that people who may qualify for something can find other things that they're willing to come in and use and potentially pay for. And that's probably the best use case of all. So simplification will drive people into the category. There are a lot of people north of us that are going to come into the category with simplification, and then our job is to show we can demonstrate real value they're willing to pay for, and the going to free was the best case I can give you. We doubled revenue per return and increased margin in the process. Hey, over here.
Hey, Brad. Yeah, thanks. Matt Fell with William Blair. Just wanted to follow up on that a little bit and some of the comments about getting some of the free filers to potentially trade up. Now, historically, you've charged for the solution based on what type of return or what type of schedule you're filing. So with the exception of TurboTax Live, it's mostly been based on complexity of the return. Mm-hmm. How do you get customers to trade up if their return is going to be simple or qualified for free? Does that involve perhaps changing the pricing and pricing for functionality versus just pricing based on the complexity of somebody's return?
Yeah, it's a wonderful question, and this year there will be a complete reset in the industry. What you will see happening as a result of the IRS tax simplification, instead of having all these different forms, have one form with 6 schedules. So complexity-based lineups, which historically have been the way the market has gone, will shift. So we aren't prepared today, and we don't want to, for the obvious reasons, announce what our product lineup will be, but you should know our team has been hard at work and partnering with the IRS over this period of time, and we will have a game plan to do that. But if I give you an example of what that might look like, Greg shared one of the big learnings we got, is we had made an assumption that people who wanted TurboTax Live were complex filers. What he came back and discovered, and what we discovered, is the simplest of filers have a need for extra confidence and advice, just like the more complex filers. So you can go to TurboTax.com right now, and we're running experiments. One of the experiments you will see is TurboTax Live is now available for free customers all the way up to those who may be buying the higher end lineup. That is an example of how someone may choose to get more value and be willing to pay for it. Yes?
Hey, Brad, it's Brent Thill with Jefferies. Many of us that have covered you for a while haven't seen a product cycle that compelling in TurboTax Live, and curious if you think we're correct in that assumption. And also, just when you think about the playbook going in, I don't think you really marketed this solution. So if you could just talk a little bit about how your playbook shifts without giving us all the secrets of what's going in.
Yeah, I'll start with the second part first. We had several learnings. Greg emphasized we take pride in execution. We also take pride in admitting when we didn't get it right, because it gives us a rallying cry to go after it bigger and better next time. This year, as you saw and you watched our advertising and you saw when TurboTax Live really started to become a little more prominent, it wasn't really in the advertising at all. In fact, it was in a "there's nothing to be afraid of" campaign, and then there was a little screenshot at the end as a ghost came in the attic that said TurboTax Live. So we really weren't even creating the category or helping people understand there's something fundamentally different. And the other thing is, because we had assumed it would be the back half of tax season when more complex filers come in, we really weren't even hitting the message in the early part. So I think you'll hear a more holistic go-to-market campaign this year without giving up much more than that, that says a lot of people need live, not just those people on the back end and not just the most complex filers. The second is, how big is it? You know, we can talk about TAM, $20 billion TAM. We can talk about 84 million people above us. We can talk about the fact we lose 3 million a year to that group, or that there's 10 million that switch inside that group. But I would step back and say this. This is the big aha for me, being in the company for 16 years. We have always talked about this as do it yourself or get assistance. It was an or. TurboTax Live just showed the world there's an and. You don't have to make a choice. You can be at home in your pajamas using the software, and if you need an expert, you can press a button at a touch of a screen. They come in, they don't see you, you see them, and they show you where to find it in the product, and at the same time giving you the confidence that you need. I think this is, quite frankly, the next definition of what tax will look like. And we are far ahead with technology that's patented and a network of pros that are willing to come in. And so I'm sorry to sound overly bullish, but I can tell you that this is one of the more exciting things I've seen in my time here.
Just a quick follow-up. Neil Williams had mentioned in the past there was really no ceiling on margin, but you've been trapped for 4 years, assuming Michelle's guidance, between 33 and 34 for 4 years in a row.
Yeah.
So when you think about just the long term, I know you're not giving guide on long term, but is there anything, would you hold that statement that Neil made in the past that there really is no ceiling? You could march to a look-alike of Adobe putting up 40% margins.
Yeah, I really appreciate you asking that question, and I want to start with just the way you asked it. We haven't been trapped. We've made a choice. We saw a fundamental opportunity to refresh our technology, to lean into the public cloud, to advance and hire data scientists 62% more than we had, and to really get this company set up for the next chapter of success. And we have made those investments, and then what we did is what Michelle just walked through. We committed ourselves to, we believe we can grow this company double digits organically, which we've done for several years now. We'll grow our revenue faster than our expense, whether the sun is out or there's a recession, and that will give margin leverage and operating leverage. So we do not see a ceiling. I've often said, having the chance to be the fifth in this seat over 35 years, everyone before me, including me and Neil, used to predict what the number was, and every one of us were wrong. We have natural economies of scale, and now when you move to the public cloud and you have the ability to not have to have the data centers and the infrastructure, but actually you order the instances on demand, we have a lot more opportunity to be efficient. But we also want to keep in mind that we're trying to build the company for the next 35 years, and so in any given year we may make a choice, and we will come out and tell you we're making the choice, but the answer is there is no ceiling on the margin expansion. It's just a choice of what we think is the right balance between short and long, and we will always talk to you about that.
Hi, it's Jen Lowe from UBS.
Hey, Jen. I recognize the voice, but I couldn't see where it's coming from.
You know, it's easy to find me in the crowd, I think.
Yeah.
It's not a lot of blonde women. Me and Michelle. I wanted to ask about, so in your opening remarks and where you talked about things that went well and maybe could have been, opportunities that you didn't execute on as well as you would have liked in 2018, you talked about customer delight, and we talked a lot about the first use experience and opportunities for improvement there. But there's also a line in there about reimagining customer care that didn't get as much discussion in your remarks. I know in later presentations there was discussions around retention rate, and we saw some of the self-help capabilities. I wasn't sure if that's what you meant there or if there were other areas that you thought there could be improvement. So can you just talk about that a little bit and how you envision that playing out?
And Jen, I'm glad you really pointed that out, because that's something that I'm not sure that we actually extrapolated out today, but it is a big driver. Mark Notriani, sitting over there next to the wall, could you raise your hand, Mark, is our customer success officer, and he came out of TurboTax and was the father of TurboTax Live. And why I share that is because for years we have had a break-fix model. We have something that doesn't quite work the way the customer expected, or perhaps we didn't quite have it as smooth as it could be, and they phone someone for help. Now, the process they go through is they first expect no problem to have occurred and no confusion to have occurred, so that's our bar. If there is one, the first thing they do is they look in the product for help. If they can't find answers, especially the personalized answers, like Greg said we're now starting to deliver, Then they go to the website and they ask others. There's got to be an answer out there, Google or something. And then if they end up really frustrated, they will call someone in our customer care center. And at that point, they're usually a -40 net promoter. And our agents do everything with love that they can to get them back to 0. Customer success is get out of that model. Design the quality in, take on the first use, make self-help deeply personalized, and make the human being at the touch of a screen able to come into that experience, not just TurboTax. Now imagine that for QuickBooks. Pro advisors working with QuickBooks, or any other service we have, a financial advisor potentially down the road with Turbo customers, and have the ability of a human or deeply machine-driven personalized self-help experiences that help you proactively answer the questions as opposed to you coming in after you're frustrated. So customer success is really more of a proactive, preventative, advice-giving as opposed to sitting here and answering questions and helping you dig out of a hole. And we've got the foundation in place with TurboTax Live. We already have efforts underway to say, how do we bring this across the entire company? And that's customer success. Go ahead, Jen. You get a second one.
I've got the mic. I've been
All right,
taking
that's
advantage.
the most important part.
Just one more, if I can slip
Sure.
it in. So, I think the booths and the presentations did a great job pulling together the pieces of the the connectivity between consumers and the small business segment, and that makes a lot of sense in the U.S. where you have a very broad product portfolio and probably the big growth opportunities adding users, but also improving monetization. In international, you don't have as broad a product portfolio currently. You don't have the consumer tax business outside of U.S. and Canada. Should we envision that type of playbook being applicable in the international markets as well, or is it going to be more two separate playbooks, one U.S. and Canada, which is more about that connectivity story, and then more of a land grab type story in international?
Right, Jen. There's a two-part answer. There's a today and an opportunity in the future. So I'll start with today. We made a decision in 2012 to become an open platform, to have our data and our customers work with our own stuff as well as others in the market. And those others in the market, by the way, may be in the same space we are. We are proud to be partners with Square and with PayPal and with ADP and you name it. And so in those international markets, many of those players are there. So if we don't have a fully built out solution yet, we are more than happy to have our customers connect with those other apps to help them be successful. And there's benefit in that ecosystem for us. It increases the stickiness of QBO. Their data flows into our data lake. Our engineers go to work and we're able to do other things. And so there's a real benefit for that, for the partner and for us. The second is tax itself. TurboTax Self-Employed. Greg showed the solar system, the 5 rings, that 5th ring being we're now in the US and Canada. Tayloe described we're rewriting that technology and showed the multiple chapters of a now AI-driven tax engine that is more rules-based instead of procedural-based, which is what it used to be, which means we can lift and shift into other countries once that is done. And we're going to have that journey over the next couple years, and then we'll be running experiments to say, can we take the rest of the Intuit ecosystem into other countries? If we choose not to do that, the good news is our ecosystem will work with the accountants in those countries or anybody else, and the customer still wins. Great. Okay, over here on this side. Jim McDonald.
Hey, Brad. Well, thanks for all your hard work over the years, and good to be with you here. And good luck in the future. Question on personal finance. How do we think about that in terms of the impact it could have on your results? Now and then sort of how you view it into the future?
Personal finance is one of those come full circle things. That was the original idea and the thought that Scott and Tom Prue and the generations before us set out and said, wow, there's got to be a better way to help people have a more fulfilling life and financially rewarding life. And we've learned a lot over the years, and some things have worked and some things haven't. But now with this next chapter and with all the things we shared with you today, we think we have a chance to come back in a much more profound way and have a greater impact. With that said, we are in an early chapter. So it may be a 35-year theme, but we're 12 months into Turbo and rethinking Mint. So in terms of any materiality, we have not baked anything into our forecast right now other than experiments and rapid learning. What you will see over time is that as we continue to have reasons to believe, we will come here next year and say, because of this, we now believe this, and that will show up in forecasts. So right now, know that we're committed. We've fallen in love with the problem. In fact, we've been in love with this problem for 35 years. We think we have a better how now. And as we start to get evidence that how is going to build durable advantage, we'll build that into our forecasts. Another one over here. Thank you.
Hey, Ryan Malentro from Barclays. Hey,
Hi.
Quick question for you as you kind of leaving. If you look at the opportunity set at the moment, it's kind of the best I've seen for years. You know, you can go on TurboTax, you go live, and there's a massive upside. On the QuickBooks side, you have international, but then you go to advanced, so there's a big market over there. Then you have personal finance. There's so many different areas. What's your advice, or how would you think about resource allocation and kind of there's a lot of different battles, and all of them are very important and could be very, very big for you. But the risk is also like you kind of get muddled in all of them and nothing really works kind of properly. So how do you handle that?
Yeah,
or what's advice for Sazan?
You touched on that really well. First of all, you have to have confidence in the leaders, and all the leaders you've seen up here on the stage have run different parts of this company and have been in this company for years. And they're steeped in the methodology. We have a premise. Do not rely on PowerPoints, position, persuasion, or politics. It doesn't matter who has the most stripes on their arm. It doesn't matter whose PowerPoint's the prettiest. We want to see evidence. We want to see experiments. We want to see results. Because of this, we can bank on that, because that de-risks our decisions and creates upside. And then we make portfolio bets and investments based upon that. So the answer to your question is right now we do have a really good, robust set of opportunities. But the ones that we will pursue the most and with the greatest vigor will be the ones that actually have reasons to believe and demonstrated proof that we can actually get a real return on that investment. So right now, we tried to showcase the ones we're most excited about, and we tried to handicap or caveat the ones that are still early days. DIY tax, we're all in. TurboTax Live, absolutely. QuickBooks Core plus International, plus going up to the enterprise, because we already have it in desktop, we can go there. And then we have lots of other markers down, like Turbo and the consumer space and those things. And I think those are the ones you hear the most energy on because we have reasons to believe. But the best way to kind of answer the question is to flip back through the presentation and see the size of the evidence today, and that's where you should see us doubling down as we go forward. Yes? Then I'll come back over here.
Thank you, Dimitri from Atlantic Equities. You've talked a lot about artificial intelligence and how effective it is at giving the right answer and personalized answer. I guess one of the issues with tax is that sometimes people are just worried, so they need to be reassured, even if you give them the right answer. And just wondered if you could share a little bit more feedback in terms of initial reaction from your customers, and if there's anything you can do to sort of break down that barrier and basically reassure them, if maybe it's to use more voice recognition or any other technology. Thank you.
You know, you put your finger on it, and I'm going to borrow from Jenny Rometty, who at IBM coined this phrase. So, he who steals from me steals twice. I've never had an original idea. I would prefer to refer to this as augmented intelligence, not artificial intelligence. There's a lot technology will do for you, but it won't always resolve that self-doubt or that lack of confidence, and that's where a human expertise comes in and complements the technology. That's why I love things like TurboTax Live, because where you see the artificial intelligence machine learning kicking in, is it's going to personalize those self-help answers inside the product. But if you still don't have the confidence, it's going to match you with the right pro, so we'll get that whole matchmaking thing out of the way. But then it's going to be a human being with empathy and care that's going to help you get to the place you want. And in the process, they're going to draw circles on their screen that'll create circles on your screen and kind of teach you. And hopefully you'll come out of that not only with having been benefited by artificial intelligence, but with a human being who taught you in the process. So I think it's the combination, the intersection of two. That's why when we talk about indispensable connections, it's between technology and products, but it's also between people. And we think it takes both for this to really come to life. There are techniques we're working on. Conversational user interfaces kind of personalize and humanize technology a little bit more. So that's one way that we're going after it. But I think at the end of the day, there will always be a human being behind that click. And that's the magic that we think we're going to bet on. Okay, we come over here.
Brad, when you gave your long-term tax guidance of 8 to 12%.
Did you like that, Kartik?
I did. Better than I expected. How much of that is related to the tax simplification? So, you know, I listened to Greg's presentation, your comments, Michelle's comments. You're all very, very excited about TurboTax Live, very excited about tax simplification. So how much of that played a role in that guidance? Is it that instead of 10, it's 12 now because of that?
So if you go back and you look in the presentation, there were the 4 drivers that I went through a few minutes ago. And what you'll see really jump out now is revenue per return has a higher yield than it historically did. We used to expect about 1 point from that. It's now up to like 3 points, and that's because of the mix shift, the TurboTax Self-Employed, the TurboTax Live, the things that Greg talked about, where we're creating more value and still disrupting those people north of us who are charging even more for those kinds of services. So that's sort of the short answer. But then if you look at it more durably, there are 3 questions that people have about, can you really get there in tax? The first is this tax reform and policy change going to be a headwind or a tailwind? And I would point back to evidence again. Because of the last 10 years, where you've seen the do-it-yourself category and you've seen TurboTax grow faster than the industry and any other alternative, and during that time there have been policy changes. Affordable Care Act, the PATH Act with Earned Income Tax Credit not getting refunds till February 15th. Through all those policy changes, it has not shifted customer behavior. They're leaning towards digital. So right off the bat, there's a secular trend that we would say policy has not been able to negate. The second is simplification, as Greg said, is actually a catalyst, not a headwind. And then the question is, are you going to have a trade-down risk? We believe the 84 million will come down, and we believe we've demonstrated with the free example that we can actually create value customers will pay for. And then the third question that we have at the end of the day is, are we able to put together the things that we're doing with TurboTax Live and do it yourself to create something no one else has? Those are what goes into the 8 to 12, as we fundamentally think we have a historical reason to believe that the category is advantaged. The second is there will be a policy change that could cause a downshift that we think will be a powerful catalyst for us. And the third is we think we have innovation no one else can match. So it's those things that have led to the 8 to 12. And the biggest lever you see in the next year is that revenue per return. Thank you. Yes. Hey, Ross.
Hey, Brad. Ross McMillan from RBC. So it's a question that comes back to margin. And when I look at that slide on ARPC across the product portfolio, it's clear that we're pivoting up relative to where we had been. And that's both on the consumer side of the business as well as the small business side of the business. So when we think about margins in that context, one would think that margins should gravitate up. So if they're not doing that, is it because you're leaning in to customer acquisition, or what is that dynamic that stops the margin going up when revenue per customers is, I think, on a blended basis going to be going higher?
Yes, you answered the question. It's an investment choice, and Michelle laid out the 5 areas that we're leaning into this year, while still adhering to our principles of revenue faster than expense, which gives us operating income dollars faster than revenue. And so if you looked at the 605 guidance before 606 and all the wooden nickels move, it was 10 to 12% revenue, 11 to 13% operating income dollars. So that is margin expansion. But where we are investing, even with that, is we're investing in that first use. I love the analogy someone said, fish in our backyard. Our customers aren't coming to TurboTax.com and QuickBooks to watch animal videos. These aren't exciting categories. They're there to solve a real problem, and we're not translating that into business. So first use is an investment priority for us across all the businesses. The second opportunity for us is to make sure that we continue to lean into artificial intelligence and machine learning and get into the public cloud. All of our customer-facing apps will be in that public cloud, as Taylor talked about, but we still have infrastructure. We still have all of our own apps that we use for our employees we got to get into the cloud. And then those last 2 opportunities are TurboTax Live and building an enterprise version in the cloud for QuickBooks called QuickBooks Online Advanced. Those are investments. Those are investment decisions. We're doing that while still getting operating leverage, but those are choices that if we chose not to do, we could get faster expansion quickly, but I think we would shortchange the company's long-term growth rate, so we make those decisions and trade-offs.
That's great. And then just to follow up, on consumer tax for next year, I get the simplification argument, and there's going to be a lot more filers that are going to go from itemized deductions to a simple file.
Yes.
But they might not know that going into the season.
Right.
So how do you get confident that this isn't something that has maybe a bigger impact in the out year when people have gone through one cycle?
Right. Well, I hope what you got out of our conversation today and also out of working with us over the years is we really have a gestalt, which is we want to help the overlooked and the underserved. I mean, to have a mission of powering prosperity, which is akin to eliminate poverty and increase the odds of success for small business, we don't want this to be a customer didn't know, therefore don't tell them. We actually want those who qualify for standard deduction to know that they qualify for standard deduction with no bait and switch. But then we want to demonstrate to them, by the way, if you aren't quite sure, here's some other things that you can come into. And we think that's what builds it durably and sustainably. And then ultimately, all you have to do is look past tax simplification at the last 10 years, and you can go past 10. We just decided to do 10 because the slide gets too hard to read. You can go back to as long as the IRS has been reporting, and there has been a shift towards do-it-yourself. Just as the generations grew up Googling everything, using their smartphones, and saying there's got to be a better way. They don't play phonographs now, although there was a quick comeback on phonographs 2 years ago. Now it's back. And so that's the natural thing that's going to continue to power that growth. And I think tax simplification for us is going to be a catalyst. We're going to make sure customers know what they're qualified for, but then we're going to try to solve other problems for them that they're willing to pay for. So I don't think it's a short-term sugar high. I think it's sustainable. Okay, up here in the front. Somebody have a microphone here? Oh, okay, I'm sorry. You got the mic, and then I'll come to you next. Thanks. Go ahead.
Thanks, Brad. Greg touched on building out a consumer finance platform. I guess first question, how quickly do you think you'll push beyond the walls of TurboTax, and how does that potentially change the go-to-market? And then kind of as a follow-on, how should we think about the potential of the consumer finance platform as being a new channel for TurboTax?
Yeah. So we are outside the walls of TurboTax today. We have a wonderful product called Mint that over the years we have continued to grow and cultivate. We've tried some different things along the way, embedding bill pay service and other things in there. But I think with the work of Turbo, we've come full circle to what is the most important problem that Mint solves, and then what is a whole new channel of potential consumers that could come into a product like Turbo. And we thought at one point that it could be an either or it could be an and right now we think that both are solving different problems. And so the net is Mint's got an outside the walls opportunity today. Turbo has an inside the walls in TurboTax, and then together we're knitting together a personal finance strategy that we're still just early days in to say how does this fit together in something bigger and more meaningful than what it is today. And we don't at this point have anything else to share beyond the fact that we do have 25 million people between Mint and TurboTax, or Mint and Turbo, who consented to share their data. They're getting a free app. They're getting savings from other partners, and we're getting paid a revenue per return that's better than what we would have gotten paid if we'd asked the customer to pay us directly. So we have enough reasons to believe that we're going to continue to lean in, and we are outside of TurboTax today and Turbo with Mint in a pretty meaningful way. Okay, right here? Yes.
I had a question about, you were talking about, or I can't remember who was talking about it, but all the partners that Intuit works with, and that being a way you can attract more people to the Intuit platform. The payroll was one. And then outside I saw this interesting demo where you work for Walmart and they could be a channel, telling their employees, look, you can file instantly, this will be easier for you, cheaper for you. How do we think about those opportunities? I guess what needs to happen to leverage that connectivity into new customers for Intuit? Like, sort of where are we on that?
Yeah, so this was the fundamental premise behind going to an open platform in 2012 and then really leaning in 12 months ago with this one Intuit ecosystem strategy. So the first thing we needed to do is we needed to recognize that customers use 18 apps on average to solve their business needs. And if you look at them by vertical, they're different. A florist has a different set of 18 apps they use than a dentist, very different than a contractor, very different than a pool cleaner. And so the first thing we had to say is we're never going to verticalize and get everything that we need to do to solve this customer's problem. But instead, why don't we become the center of gravity, because all customers share two things in common, money in and money out, which we happen to call accounting. And let's open up that platform and allow customers to work with any of those apps. And that gave us the first leg of growth. Then the second thing we discovered is there are these mega platforms and mega partners, whether they're Chase or they're Facebook and Google or they're PayPal and others that serve tens of millions, if not hundreds of millions of customers, and their customers have the same problems as our customers. So we began to form these relationships with them where we're creating real wins between both of us and the customers winning in the process. And so I feel like that opportunity is the opportunity that the last 12 months we've demonstrated we can go beyond an independent third-party software developer with us, and we can do that and these bigger players, whether it's Walmart or others, where we can help them solve a problem for their customer they couldn't do on their own. And they, in turn, are going to help us solve a problem or bring us customers we couldn't have gotten to on our own, and together we're all going to win. So that's the big unlock in this next chapter.
Can you quantify, I guess, last year, how many customers in aggregate, either through QuickBooks or TurboTax, came from Chase or Walmart or these these other channels?
Two-part answer. You should know that we know that number, but we aren't sharing that number. And it's not because we don't love you all. It's that right now, competitively, we think we're onto something that we want to make sure we can build durable enough and at a large enough scale that it will become meaningful and hard for someone to replicate. But yes, we are tracking that. I think Michelle talked about, when we talked about what will drive confidence in shareholders, and one of them is not only the customer growth, but then the number of interactions and connections happening in our ecosystem. That's something we've added to our model in the last year and a half, and we're really tracking that with a lot of rigor.
Brad Reback from Stifel.
Yeah.
At what point do you have to get confidence to begin to monetize the platform directly, as opposed, we'll say, the indirect monetization you get today via better retention?
It's a great question, and it comes back to the data stewardship principles that Taylor reminded us of that we had put in place back in the early part of this decade, which is we believe it's the customer's data, not ours. We will never use their data without their consent. We will never use their data unless it benefits them directly, and we will never sell their data. So right now, our customers have consented 96.5% in TurboTax and Turbo to say, yeah, go get me lower interest rates. Go get me a pre-qualified loan. Go help me pre-fill half of this application. I'm all in. And in that situation, we can monetize that in an indirect way with a partner. Today, we have not come up with a way that we think honors our data stewardship principles and or benefits the customer in a way where we would go do anything other than that. So as long as we can find a way to create value for the customer that they agree to, that we can get paid some other way, we're going to pursue that avenue. But directly monetizing the platform, charging someone for a connection to get the data, that's not the game that we think makes sense at this point in time. Yes? Coming right behind you. Thank you.
Thank you. Just on TurboTax Live, so obviously you're addressing a big market, you're innovating really fast, but I'm assuming competition will start to do something similar over a period of time. So in your mind, how do you think competition is going to evolve, and what do you think is a sustainable advantage relative to when the peers catch up on the technology and other stuff? Sure. Where do you see the sustainable advantage?
Yeah, it's a wonderful question, and you heard everything from Diego's presentation of a customer-driven innovation models, finding a big important problem that we and our partners can solve well and build durable advantage, and I articulated the moats, the competitive moats. The first piece is competition is great. And I don't mean that just to throw out a platitude. They continue to raise their game, they raise our game, and collectively we help small businesses and families understand there's a better idea. You heard the numbers Sasan shared. 35% of small businesses still do payroll with a paper and pencil. So it's not a zero-sum game today. The more we all get in, the more we can revolutionize and help these individuals succeed. And then the question is, who's got a real competitive advantage and a deep moat? Our strategy is such that we have assets others can't match. Very few companies serve the consumer, the small business, the self-employed, hundreds of thousands of accountants who are willing to be pros in TurboTax Live, already had the connections with the banks from the days of Quicken from years ago, and all those assets have rolled up to now. We do 40% of the nation's tax returns. We are the 5th largest bank when you aggregate all the bank accounts. $2.6 trillion of payments flow through. That's 25% of the GDP. We have this huge set of assets that we're starting to say was a latent network, and now we're going to unlock it. And then Taylor talked about, in addition to just having those assets that are hard to match unless they go cut deals with everybody, we have patents and technology and a multi-year head start on TurboTax Live that it's incredibly hard to catch up and replicate, but we're not taking any of that for granted. We wake up every single morning with we're worried about where the competition is. We seek to understand and learn from them, and it used to be called plagiarism, now it's called benchmarking. And we're okay taking an idea someone came up with that we think could be a better way of doing it and running fast. But our sources of durable advantage, to answer your question, are in my presentation. And they really are the platform and the power of the platform, the data, and then our data science that matches up, and then the indispensable connections or network effects we're starting to create between our customers that others can't replicate. Okay, I think we are out of time, so I'm going to ask if I can bring this to a close just to respect everyone's time, and you should know we have lunch out there, and we were more than happy to take those questions for you that didn't get the chance to ask. I would like to add a closing thought. I obviously won't be on this stage next year, but I want to leave you with two things. One is when I sat down out of university and asked my mom and dad, how do I choose a career? They had simple advice. One was choose a company with a purpose, with a why, something that makes your heart beat really fast. And I can tell you for 16 years, I have been at home. This has been an incredible company that lives its values and cares deeply about its customers and every day wakes up trying to be a better version of itself. And the second thing my parents told me is surround yourself with people smarter than you so you can learn and grow every day. And from the privilege of working with Scott Cook for 16 years to learning from Bill Campbell to working with the team you saw up here, I can guarantee you I have worked with people smarter than me, and they've made me a better version of myself. And last but not least, I really want to thank you. It's been incredible interacting with you, spending time with you, having you sharpen my thinking and sharpen our strategy. It's been a privilege. Thank you very much.